What's up, guys? Today we're going to talk about one of the easiest day trading setups that you can find in the marketplace on a near daily basis. For this setup, we're mainly looking for two different things. A, which is something I harp on with every intraday setup, that's volume. We have to have volume. There has to be eyes looking at these stocks for any of these patterns to really give any sort of edge or indication of the directional bias of the stock. So that said, we noticed there's big volume going on with Tesla today, and so the next thing we had to do was identify a trend. Well, it pushed up out of the gate, came up here, had a nice little pullback, went up to 215 and rejected. Again, we put in another higher low, back to 215, rejected, but we maintained this trend line here. So following along, I have this chart up on one of my other screens. We notice again it goes to 215, and all this time this is consolidation. There's a lot of people that are sitting here going, okay, what's this thing about to do? Where's a good place for us to buy? They all want to see it break 215. So that's what I'm looking for. So after this last touch to 215, it came back down, and this action right here, we call it a curling action. This is a very bullish chart setup, especially when you're going into a psychological level such as high of day, this whole number here, and having known that there's bullish momentum here. So as soon as we get this curling action through this level it's been consolidating at for almost an hour now, so we're just waiting, and as soon as it cracks this 215, I'm going long. So now that you know how to find the entry for a setup like this, how do we actually trade it? What's our risk, and how do we take profits on it? Well, for me, I'm always looking for at least a 1-to-1 or somewhere in between a 1-to-1 and 2-to-1 risk to reward ratio. So basically, if I think I can lose $1, if this goes the wrong way, then I need to make $1 average on the profit side before taking profits off, before selling. So on this stock in particular, I would play this two ways. One, you can give it more room to breathe, which would basically put your stop below this last low over here, or this most recent low, which would be about $2. Personally, I'm rarely doing that. I would most likely be looking for under this little low here, where the last consolidation phase was, and maybe wait for a candle close under the trend. So since it had lifted off the trend and then pushed, this would be a reasonable stop for me, even though many people wouldn't like that. Some would say below the trend line, which is just fine. It gives you a little bit more breathing room. So that would put us at about a $1 risk. And so my average when selling needs to be at least $1. So if I got in, say, 215.10, I want my average of all my sells to be over 216.10. So usually when I'm playing a stock like this, I'll be in pretty heavy if I see a nice consolidation like this. So on the first pop up, I'm going to try and sell into this momentum, maybe like a quarter to a half of my position, and then on the next push up, which is closer to my RR, I'm going to be taking off at least 50% of my position. At that point, we'll either move our stops up, or we'll just be in the trade essentially risk-free, and we can just start looking around the chart for significant levels to start taking off more profits as we get near to resistance areas, or we're just up so much that we want to lock in the gains. So moving on, I have one more example for you. Let's move to this other chart, GILD. As you can see, I've identified this psychological level over here at 63.50. At the open, we dumped, we went up to the level, it rejected, we went up a third time, rejected, but this time we've got higher lows forming. The price action staying above the VWAP. We're getting a curling momentum again, this consolidation in this area with the curl, and then we're taking it long over the psychological level for the breakout. We're going to pick our risk, which on this one we'll say under the last low. I usually don't count the wicks so much, so I'd probably put it somewhere in this 63.30 to 63.35 area, which means I've got about a 15-cent risk. In order to get the 1-to-1, I'm shooting for 15 cents over my entry, so I'm going to start selling somewhere around 63.65, 63.70 on this trade and take off half and then just manage my profits from there. So now that you've seen this setup, you can spot it really easily. They happen all the time. It's very simple. It's one of the most clean and concise setups that I've found in the market to really just know when to get a very precise entry. I mean, you're not going to see this on every stock. You're not going to see it every day, but when you do, you know how to play it. You know how to take advantage of it. As usual, please do not hesitate to ask any questions. Feel free to do so in the comments section, or you can reach out to me on Twitter @confused and shoot me a message there.